guy, how far now?
I'm not really fine. Do you know they paid me last week and right now I can't even boost up to 10,000 naira in my account?
Seriously?
Yes.
Did you budget?
Which one is budgeting? I'm not a politician.
That's why your money is missing like NEPA lights.
But I didn't buy anything serious, shoes, bags, the thing that guys need now. And just like that, fiam, the money has disappeared.
But it's all these little things. That's why it's taking your money.
But what should I do?
See, you have to create a budget. You have to track your spending. You have to prioritize your needs over your wants. And you have to save before you spend, not the other way around.
So what you're trying to say that this money management thing is no child's play?
It's no child's play at all.
The Money Click is an annual financial literacy program to help you up your money game. The Money Click is not just about money, it's about mindset. So in the Money Click program, go beyond budgeting to rewire your thinking, to rewire your mindset, to change your thinking about income, to change your thinking about money management. So we'll help you grow your income, we'll help you manage it, we'll help you invest with confidence. Money is not just about what you know. Money is more about how you behave. And every day in the Money Click program, what we'll try to do is to influence how you behave about money. This is not just financial education. This is financial transformation. I will hope to see you become a part of it. Thank you.
Hello, everybody. Good morning and welcome to today's YouTube Live here in the Naira Academy. Welcome to you all. I'm happy to be here. Thank you for being here. Thank you to Mrs. Obeneju Adesuji. Yes, I got it right. Thank you so much, Ma, for being here in time. Thank you also to you, Madam Dancy KO1. Thank you very much for being here. Glad to have you all here today. Yes, Mr. Isaac, I see you. Welcome and good morning. And welcome to today's live session here on YouTube. And today we want to look at why people lose money in the stock market. Right? Why do people lose money in the stock market? What's the reason why people lose money in the stock market? What is it that people do that make them lose money in the stock market? Quite a lot of questions that we are going to be providing answers for today, right? A lot of questions with answers, because it's important that we answer these questions if we're to make something good out of the stock market, right? So thank you very much for being here. Okay, so we'll get right into it without wasting much time because we don't want to spend any more time. So why do people lose money in the stock market? The stock market has created an enormous wealth, for a lot of investors. A lot of times when we hear that people, someone tucked away money consistently, little by little, for some time, or for a long period of time, the person accumulated a lot of wealth, usually on the stock market, right? But then there's still another side to the story. So it's more like, okay, the only story we get to tell most times is the good stories. But there are people who also enter the stock market and they lose money. They lose big time, right? I don't know if there's anybody here that has gone into stock investing before and lost money. Yes, people get into stock investing and they lose money in a very painful way. In fact, that has discouraged a lot of people from investing. Losing money in the stock market has discouraged a lot of people. In fact, they went in, they lost money, and they told themselves, you know what? I'm not doing again. This thing does not work. It doesn't work, right? But there are reasons why you lost money. There are reasons why people constantly lose money in the stock market, right? And our cohort one leader is here, Mrs. Emily Sarah Ngodomo. Welcome, ma'am. Yes, okay, this is a topic that you need. I'm glad. We're going to go right in, right? So one truth is that the biggest enemy in the stock market is actually not the market. The problem is not the stock market. The problem is human behavior. So most losses happen not because the market is unfair, but because people approach investing with the wrong mindset. People approach the market with realistic expectations. People approach the market with poor strategies, right? Very poor strategies. Like talking about mindset, people reach out to me, and the first things they ask is, where can I put my money now that in 3 months' time I'll bring it out doubled? That's the wrong mindset getting into the stock market. People are looking at the stock market like a money doubling machine. Hey, a place where they put their money in immediately within yes, lack of knowledge is part of it, right? Within the people want where they put their money, and in a few months their money will just double, triple. The idea that a lot of us have about the stock market is that it is where you just put money. In fact, the idea that people have about investing in general is that investing should be some place where if you put money, your money is doubled. And that's why people get into the wrong investments. Why? Because of that thinking, because of that mindset of investing should be something that is doubling your money. Yeah, investing can double your money, but not immediately, not in a short period of time at all. All right. Okay. Yes. All right. So let's look at some common reasons, right? Very common amongst us why many investors lose money, right? Let's look at number one. The first reason is chasing hot stocks instead of real businesses. People are in the business of chasing stocks that are hot. When people come online, in fact, today, because there are a lot of content creators, so the content creators are Jehovah Sharp Sharp. I love those words. Coach Reddy will always say that. Jehovah Sharp Sharp. So back to the point, chasing hot stocks instead of real businesses. So a lot of people invest on excitement rather than understanding. For example, people have been all over social media. When is Dangote refinery declaring IPO? We want to invest in the refinery, we want to buy their stocks. It is out of excitement. A lot of people know nothing about Dangote refinery, apart from the fact that they just refine fuel. Nothing more. Nothing more. Right? So people chase stocks that are hot instead of looking at real businesses. People hear statements like, this stock is about to explode. This is the real thing right now. And they buy. And people hear everybody is buying this. Of course, influencers are everywhere. They will tell you, if you're not buying this stock, you're left behind. You want to buy. And this is the stock everybody is buying right now. You want to buy. Right? They come on social media, they tell you, if you miss this opportunity to buy this stock, you will regret it. You rush in. Put your money in. And when you put your money in, you pay the price. Just like some of us who are in the Money Click program and with the book that we're currently reading, right? One part of that book that talked about, I think that's what the book started with, investment versus speculation, right? The truth is that if you are moving into the stock market and you do not have a good understanding, you're just chasing hot stock, then you're just speculating. And if you're speculating, you're gambling. So a lot of people rush in to buy stocks without researching anything about the company. Right? And oftentimes, right, by the time the news reaches the public, right, about the stock, about the hot stock that is trending, the early investors are already preparing to sell. What am I saying? What I'm saying is, you hear that the stock of this pen, it's trending. Everybody's talking about this stock. This pen, if you don't have this pen, you're losing out. You're not there anymore. If you don't have this pen, you're making a mistake. By the time everybody is talking about this pen, it's too late to invest. By the time they're talking about it, the real investors are planning to sell. So everybody's talking about the pen. The people who are the real investors are the people who bought it when nobody knew about the spend. Those are the real investors. And that means that they bought it at a low price. Now, by the time there's a lot of noise about this spend, the real investors know that yes, this is time, it's maturity, right? There is trending. That's a sign to sell. But for people who don't know, they think that when it's trending is the time to buy. So they buy, and before you know it, the real investors start selling, and it will peak, and the price will start falling. That's why you buy stocks today, right? You buy stocks today, and before you know it, the price is already dipping. And then you start crying at what happened? What happened? Why is this thing happening? That's why I don't like buying into all these things. But before then, you knew nothing. Okay? So, and when this thing happens, the late buyers are left holding the stock while the price drops because you're hoping that later I think this price might come up and I'll get something out of it. But if we listen to legendary investor Warren Buffett, and he famously said that risk comes from not knowing what you're doing. That's what risk is. The risk in investing comes from not knowing what you're doing. And trust me, there are a lot of us who have been in the stock market before who entered not even knowing anything about it, just because we heard them say, stock markets, they work, rush enter. Right? So chasing hot stocks will not bring you any good returns, trust me. You see those influencers that come on social media, this is not to trash them, but whenever someone comes to tell you this is the trending stocks, even if you see on Naira Academy page today, I will tell you trending stocks. It is just for information's sake. It doesn't mean you should put your money. So don't ever put your money in any stock you see that is trending. You're late to the party. Trust me. Right? So you hear about stocks they say top gainers of last week. Do you know people hear those top gainers? You know, at the end of every week, there's a summary of top gainers, top losers, right? People rush for those top gainers. That's what people are waiting for every week. But you are not the one making money when you rush into the top gainers. The top gainers you're rushing into might be at their peak, and you're buying at their peak. Before you know it, they'll start going down. And once you peak, the next thing is decline. So avoid that. That's not the right way to choose stocks. The next common mistake that a lot of people make, or why people lose money, is try to get rich quickly. This is another reason why people lose money. People want to get rich fast. Jehovah Sharp is the reason. Right? Jehovah Sharp. That's another problem. You know, many people enter the stock market expecting very fast profits. They want to double their money in weeks. They want to double their money in months. And honestly, I've received messages concerning this a lot of times. Oh, is there a stock that I can put down and I'll double my money in? Somebody has met me before and the person said, oh, I have this money right now to buy a car. But is there a place where I can put this money so that in the next 1 year, or no, not even 1 year, in the next 6 months, I can get the money out, double it, buy my car, and then still have an extra? I said, no, it's not possible. It's not possible. Now, it's not possible in the sense of impossibility. It's possible that it can happen, but that's the wrong mindset to use. Yet it's very possible that you can get into the stock market today, and in the next 1 month, your investment doubles. It's very possible. It can happen. That's volatility. It can happen. But that's not the mindset you should have when you're getting in. Because what if it doesn't happen? So you should have the mindset that it cannot happen, it will not happen, so that you have a long-term mindset. So you don't have a mindset of getting in, and before you know it, you're impatient. Right? The stock market does not reward impatience. Some people, when they invest today, 3 months later, they are checking, it's not going up, or what's happening? You have to wait. So far, you're sure of the company that you've bought into. Not when they told you to buy, you go and buy one stock they just told you to buy. Right? And probably the person who told you to buy did no research at all. And then they tell you to buy, and then you eventually go and buy. Right? Then you stand there. excuse me. If you do that, then you stand the chance of getting into trouble. There's even no need to wait. For some of those kind of stocks, when you start losing, just cut your losses and go away. But when you're sure of the company that you're buying into, right, then you know that it's just a matter of time. It's a matter of time and you get to where you need to. You just have to be patient. So successful investing requires years of consistent discipline. Why? Because companies need time to grow. You want to put your money in stock and get your money out tomorrow. And you're forgetting that what influences the stock market is what happens in real life. So the company has not doubled their income in 1 month, but you want to make double of your stock investment in 1 month. Right? Another reason why you shouldn't have this get rich quick mindset is you need to understand that the market moves up and down. It moves up and down in the short term, but it tends to grow in the long term. So in the short term, it looks like up, down, up, down. But when you look at it, look at the trend along years, you see that yes, this thing has been growing. Right? So if you want to jump in and out of stocks trying to catch quick gains, you often lose money. You often lose money. Why? Because you might be timing it badly. Right? You might be spending money on trading fees. You buy here, you pay commission, you jump out, buy again, pay commission. Right? And all of this might be just out of emotional decisions. And there's something that Warren Buffett says that I remember at this point. Warren Buffett says that the stock market is a device for transferring money from the impatient to the patient. So the people who make money in the stock market are people who are able to wait. And the people who are losing the money are the impatient ones. The number three is emotional decision making. That's number 3, emotional decision making, right? So a lot of fear and greed are the forces behind the emotional decision making. And they're very powerful forces in investing, fear and greed. When prices are rising, people feel greedy and they buy aggressively. That's the human emotion. Oh, this stock is increasing. No, because of greed, they're rushing with full force. Right? When prices are falling, people get scared. Right? They panic and they sell. And this thing that I just explained to you leads to one of the most common investing mistakes ever. And that mistake is buying high and selling low. What you should be doing is buying low and selling high. But the truth is, if you're scared, you're going to lose money. You're going to sell low. You're going to sell low. So you buy a stock today for $200 and tomorrow it dropped to $150. People panic and they sell off. The moment you sell off, you lost $50. But if you're patient enough and if you understand that the stock market is just about the volatility is part of the stock market, if you understand that the up and downs of the stock market are temporary and only reflects within months or weeks, then you know that if you wait for years, then that $150 will eventually climb up to maybe 300 or even 400 with time, and it will just keep growing. But if you're emotional, if you want to react to every dip in the stock market, you will keep on losing money. So you must be able to wait. Just wait. Buy and wait. And people who bought and waited, today they are seeing the dividends. There are people here that I know that bought through some stocks or ETFs in the past. And today, I know where they are right now. Right? I know where they are. I know some people who even came to me at some point, they bought, and before you knew it, somebody came to me. At some point, the person was losing like $2,000. And I told the person, calm down, just relax, just wait. Today, she's gaining thereabouts that same thing on the stock market. And she hasn't even started gaining yet. Just give it more time. Right? So most times, you just need to understand that you have to control your emotions when you're in the stock market. If you're too emotional, you're going to be rational. You're going to be irrational, sorry. Right? You're not going to be calm. So you need to learn how to be calm, take rational decisions, and be in control of your emotions. Emotions control is key in investing. Very key. If you do not have control of your emotions, you will lose money in investing. In any investing, not even the stock market. You know, I've told this story before about one of the earliest businesses that I did with my friend. You know, when we're still in some years back. I think this was that about 9 years or 10 years ago. So yeah, about 9 years ago. Yeah, 8 years ago. So we're living in Kaduna together as at that time. Kaduna is a state in Nigeria. For those who are not Nigerians, it's a different part, a different city in Nigeria. So we're living there up in the northwestern part of Nigeria. So we realized that okay, ginger was a commodity that was common, right? In the part where he worked in Kaduna State. So we decided to buy ginger and store ginger and sell later. So we bought ginger at about 8,000 naira per bag. I can't remember how many bags we bought. And then we rented a building where we stored the ginger. Of course, it was in the local, in the hinterland. So the buildings were quite cheap to rent. Trust me, very cheap. So we stored the ginger. And then in that season, ginger took a slow rise. From 8K, it went to 10K. But my friend was very impatient. Before he knew it, he went to 11K. He was too impatient. He said that this ginger is not growing, the price is not moving fast. That people are saying that this year is going to be terrible, that this is not how it usually is, that he was just scared. He was just emotional. So and he was the one in custody of the ginger because he was living where the warehouse was, and I was living in the town. He was living in that hinterland at that time. So ginger went up at some point to 12,000, and I think 14,000. And he said, "This is it. It cannot go beyond this." Right? Out of fear, he convinced me for us to sell, and because it was his money was in it, so I agreed. I said, "Okay, let's sell." And he sold for I think 14,000 or 16,000, thereabouts per bag. No, it wasn't up to 16, 14,000, I think. Either 12 or 14,000 what we sold per bag. And he sold everything. Now guess what? 2 weeks later, ginger went up 16K. A week, 3 weeks later, ginger was up 18,000. By the end of the month, ginger was 32,000 per bag. Because we couldn't get control of our emotions, right? Because we couldn't control our fears. Now, what we failed to look at that time was what was the history of ginger, right? In the scarce period. Ginger in the previous years got as high as that amount. But because of fear, because of lack of knowledge, we didn't make as much profit. Yes, we made profit, but we didn't make as much profit as we would have only if we were patient. Just like the stock market. Sometimes you just have to be patient. Just be patient, right? And if you're patient, your patience will pay off. We were impatient and we paid the price, right? We regretted throughout that season. Because if only we were patient enough, just to wait. Because there was no way, because we actually also didn't understand the market, right? There was no way, we didn't go to find out, okay, how long should we wait for, right? And the ginger was dried. In fact, we could have waited the whole year if it took it. Nothing would have happened to it. Yes, it also matters who you partner with, because who you partner with can, if my partner in that business at that time was somebody who had good emotions control and better knowledge, then we would have made more money. Trust me, we would have waited, right? But we couldn't wait. We didn't wait because more like He convinced me that we should sell, I was like, no problem, let's sell. You know, so at what point do you differentiate between patience and greed? Yes. Now you get to a point where you know that this can no longer go beyond this anymore, right? If you're waiting for anything beyond that, then it becomes greed. But here's the thing also about investing. As an investor, right? As an investor, you want more and more. You want more and more as an investor. But you need to know where to cut the line so it doesn't burn you. So you need to be able to tell yourself, this thing has not done past this before. Now, if you're waiting for it to do past that, then you might be burning yourself. Now, one mindset you shouldn't have when you're getting into business, one mindset you shouldn't have is the mindset of, let me not be greedy. That's the wrong mindset to have when you're getting into the market, right? Yes, you shouldn't be greedy, but at the same time, you should be ready to take opportunities. As a business person, as an investor, you should be unemotional about taking opportunities, right? So at the point where if we had a good understanding, we did our market research well, then we would have known that even in the previous year, Ginger got up to 32,000. In that same year, Ginger surpassed 32,000 in that year that we sold early. So first, we had the wrong knowledge. 2, we didn't do our research well, right? 3, we didn't have emotions control. Okay, so if we had all this, then waiting more wouldn't have been greed at all, because that is how the market had been behaving. Understanding the history of the market would help you know what to expect. It will help you know what to expect. So because we didn't understand what the market expect, well, we didn't know what to expect of the market, we reacted quickly, right? And we would have made more money than we made in that season. Now, because the people who determine the price of ginger at that time were the middlemen, right? And the middlemen were mostly the Chinese, because the Chinese were the biggest importers of this thing. So the Chinese get some guys and they come, rake up the market, and then they move out. Now, when it starts becoming scarce, and that's where the waiting comes in, because ginger is a seasonal plant. And that time when it's becoming scarce, when they've packed up a lot from the market, the prices start going up. It's pure demand and supply. When the supply is low, you're going to be able, when the supply is low and there's a lot of demand, that's when the prices will go up. Right? That's when the prices will go up. Yes, you should be able to define your enough. You should be able to define it at some point. Even when you're getting into the stock market. And if you're getting into the stock market, especially when you want to invest in certain stocks and you don't want to wait for too long, you're not on the long term, you're on short term. Well, short term, I mean 3 years, 4 years. I don't mean 1 year, right? You should be able to tell yourself how much you want to get into for that stock, and you should be able to tell yourself how much you want to get out on that stock, right? So you probably will buy at 200 and you tell yourself, this stock, I'm going to sell it at 400. That's your exit price. And at 400, you sell and then you can take the money away. But if you're leaving it for the long run, then you can leave it there for a longer term, right? But if you've been here before, you'd have heard me say that if you're investing in the stock market, you do not, and you're investing for the long term, one thing you should aim for are value stocks, not growth stocks. And then we're going to talk about that in subsequent classes. We'll move on, right? So number 4 reason why people lose money in the stock market is lack of knowledge. Like I've said earlier, a lot of people enter the market without understanding the basic principles, right? Basic principles such as how companies make money, how stocks are valued, how diversification works, the importance of long-term investing. Now, I'm going to tell you something. I even forgot the story talking about chasing hot stocks that we talked about earlier. and which also would have to do with lack of knowledge also. I'll tell a story that happened to me. I think this was in 2021. So I just got into the stock market newly. I didn't have enough knowledge, and I chased a very hot stock. Now, I don't know if anybody here have heard about the GameStop saga, right? So as at that time, the GameStop stocks was trending, right? It was trending, and I decided to jump in on the trend. I jumped in on the trend. Few hours after I jumped in on the trend, I was losing money. Now, if I remember, I put in there about 1,000. And before I knew it, I was losing 300 in the space of a few hours. I remember that particular day. Then I was working in Makodi, and we're traveling for a trip within the state, in Benue State. And on that trip, I was sweating. Why? Because of what was happening with my portfolio. I was sweating hard. And the moment I got to the place, all I did all through the journey was check. I kept checking my app. I kept checking it. Now, eventually, luckily, because yes, it was a trending stock, so it was just going up and down, up and down. Some hours into the night that same day, just before the market closed, I had my money back, my 1,000 back, with 200 on top. The stock came up again. I quickly sold out and I took my money. And that was the last time I engaged in anything hot stock. That was the last time I ever put my money on a trending stock, because I learned a bitter lesson. Now, there are a lot of people who must have bought that stock at that time. At that time when it was trending, a share of that stock was selling for like 200 and something dollars as at that time. Now, eventually, when the whole buzz was over, that stock went as low as 70 something dollars. At some point, it went as low as $50 to even 30 something dollars. Why? Because it went back to where the status quo. The buzz was over. People have made money and they went out of it. Now, before I made that mistake, what I didn't understand was that people who made money from GameStop saga were people who was in it way before the trend happened. Right? Millionaires were made out of GameStop. There was a young boy who bought GameStop as at the time when it was just $17, and he sold when it was 300 and something dollars. Right? That was a lot of money that the guy made. So those were the people who made money out of GameStop. Right? And I didn't know, because I didn't have the knowledge. So I didn't understand what I was doing at that time. And I almost paid for it. That's for that particular one. There are other stocks that I paid for dearly. Trust me. There are other stocks that I paid for, and I paid dearly for. I've lost $2,000 in stocks before. So what I'm teaching is not out of just saying it because it's something I've practicalized. I've also made a lot of money in the stock market also. I've lost money and I've also made money. But then I got to find out that the point when I lost money was the point when I really didn't understand what I was doing. Right? I wasn't working with knowledge. I was doing it according to what people said should be done. I was following hot trending stuff. I'll buy a stock today and tomorrow everything is crashing down. And there are some that I didn't even bother looking at the company. I didn't bother researching. I said, okay, I'll wait. 4 years down the line, nothing will happen. But I'm still waiting. I'm still waiting because I believe that the moment I sell, I lose. So I'd rather wait 20 years. But then the mistake has already been made. And I don't know how long it will take to rectify that mistake. And that's the reason why, if you're in the Money Click program, the book we're reading currently is one book you should take very, you should take that book to heart. That book is the basics of value investing. Because if you don't understand value investing, you're going to make mistakes. If you don't understand how to pick out value stocks, then you're going to be making errors in the long run. Right? So without knowledge, investing becomes speculation. And at the point when I was investing without knowledge, I was merely speculating. And at any point when you're speculating, then at that point, you're gambling because it becomes a probability of 50-50. When you're investing with knowledge, your probability is not 50-50. Why? Because you know, right? You are assured that your capital is assured. But when it becomes speculation, you can even lose your capital. It might not be just 50-50. You can lose your capital. It becomes similar to gambling. Right? So the difference between successful investors and unsuccessful ones is often education and preparation. Number 5 is following the crowd. Following the crowd. So human beings, we are all social creatures, right? And when everyone seems to be doing something, we assume it must be correct because everybody's doing it, right? We assume that, oh, since everybody's doing this thing, then that's the correct thing to do. Let's jump in and let's join others to do it. And also sometimes because of fear of losing out, we also jump in. And that's head behavior in the market. Buy stocks. Some people buy stocks because their friends are buying. Some people buy stocks because they heard it on social media. Like, for example, there are a lot of people who want to buy Dangote refinery stocks just because they're hearing about it. They don't know research about it. Nothing. They know nothing about Dangote refinery. Just because the headlines are talking about it, it's exciting. That's why people want to buy into it. Right? But like I said, I will leave you with this statement. Write it down somewhere. When everyone is talking about an opportunity, it is often already overpriced. When everybody is talking about it, it is already late. When everybody is talking about it, then it has become too expensive to buy. You're buying it at the wrong time, right? The great investors do the opposite, often do the opposite of the crowd. Now, for those in the Money Click program from last year, some weeks ago, I was going through our stock picks. And for those in the Money Click program, very soon we'll start sharing stock picks with you for the year. I went through our stock picks for last year. Our stock picks take us time to go through because we're looking at the financial statements, we're looking at the company, we're looking at different projections before we come and tell you, we think this stock is a stock we should buy. We looked at all the stocks that we recommended, especially the value stocks that we recommended, both Nigerian stocks, both US stocks from last year. All of them have made great progress from last year till now. We put a price that we said you should buy at. Those prices we said you should buy, they've all surpassed that entry price. Because once we tell you to buy a stock, we always give you an entry price, right? We tell you this is the price we think you should buy, right? Now, most times we don't give you an exit price because I encourage people to invest for the long term. So I don't expect you to take it out anytime soon. That's what the real investing is. Right? So it's important to avoid this crowd following. You need to understand how to do things and understand how to do it on your own. You know, understand how to read the market, understand how to interpret the market, understand how to, you know, identify stocks that are good based on different modalities, you know, financials. Like the class that we're going to be having soon on the how to make money from stock class, it's going to be different, right? What we're going to be teaching in that course is not all these things that we're talking about here. We're going to be talking about certain things like how to read financial statements. Certain things like how to find, because it is from the financial statements that you're going to get to understand the company. When we say research about the company, of course, you're not going to just go on Google and just type about the company, and that will give you what we want you to know about the company. What we want you to know about the company is on the financial statement of the company. It gives you the history. It gives you a possible projection for the company based on its finances. And most times, that's when most investors don't look. They don't look at the financial statements. That's the one that looks like, for some people, it makes them feel hazy. And for those in the Money Click program that we go the lengths to provide stock picks for, we don't provide any stock without properly scrutinizing their financial statements. And so many other parameters that we look at before we can tell you this is a stock to buy. That's why when people come and tell me, okay, out of the list, which one should I take? I say anyone, because each and every one of them were properly researched. Okay, let's move on. The next is lack of patience. Now, okay, before I get into it, I know somebody in their minds might be asking themselves, okay, if in the Money Click, for those in the Money Click, we're providing you with stock picks that are well researched, why then do you need to know about it? The reason is because I still do not want you to trust me absolutely. I need you to know what you are investing in. So when I make mistakes, you should be able to tell me, I think you've made a mistake with this. I don't think I agree with you. But when you don't understand what is going on, even if I give you the wrong thing, you take it without knowing it's wrong. That's why knowledge is key. All right? Okay. So the next issue is lack of patience. Right? A lot of investors abandon their strategy very quickly. Right? They invest in a company and they're expecting immediate results. Right? And most times, if the price doesn't rise within a few weeks or a few months, you put your money there, it doesn't come up few months, few weeks, they just sell out immediately. They sell off. Right? But real wealth in the stock market comes from holding strong companies for long periods of time. Like I would always tell people, imagine people who have held on to companies like Apple, right, for the last 30 years. Oh, sorry, not 30 years, for the last 20 years. Imagine people who have held on to them, right? Imagine people who have held on to Apple for the last 15 years, for the last 12 years. Let's say it is 2002. Imagine people who have held on to Apple that long. Right? That's where the real wealth comes in. Okay? So you need to consider that companies grow massively over decades, not over months. Not over months. Right? So a lot of investors benefit because you don't benefit out of the stock market because you timed it well. No. It's not about your timing. It's not about when you're able to get in. That's not what brings you the long-term profits, right? What brings you the long-term profit is that you stayed invested long enough. Number 7 is ignoring diversification. Some investors put too much money in a single stock, right? So it means that if that company performs poorly, the entire investment suffers. So diversification is one way that you reduce risks. So you spread your investment across multiple companies, multiple industries, different types of stocks, right? So you protect yourself from failure from a single business. And number 8 is investing money that you cannot afford to lose. Investing money you cannot afford to lose. Some people invest money that is meant for rent in the stock market. Please don't invest money meant for rent. Some people invest money meant for school fees. Some people invest money meant for emergency expenses. Why? Because most times people are thinking, let me put it, I can double it. And it comes to that doubling mindset, right? And when you invest such money in the stock market, whenever the market fluctuates, you get high BP. You get high BP. Why? Because you need that money. So your budgeting for stock investing or any investing should be separate. It should not be money that you've mapped out for fees, right? Because when you use money mapped out for fees and there's market fluctuation, you're going to panic and you're going to make rush decisions. And when you do, you're going to lose. You're going to amount losses. So for you to invest, you must map out a separate budget for long-term investing. And that's money that you're willing to let to stay there and stay for years. All right. So the stock market itself is not the problem. It's not the problem. The real challenge is investor behavior. The stock market has a way it works. If you understand how it works, then you're good to go. Right. The challenge is that most times investors have a certain way that investors do not have a hold of their behavior. Investors do not take time to understand the market, right? And that's the real challenge. So people lose money in investing because they treat investing like gambling. They treat investing like a place where they put money today and tomorrow the money comes in, right? They treat money like gambling, right? Because they want to be speculative, because they are looking for a quick money scheme where they put money today and tomorrow it matures. Now, one person that I would always tell people to read about when it comes to investing, to understand how investing really works and understand that it's a matter of being patient, right? And putting in as little as possible but consistently, is Ronald Reed. Read about the story of Ronald Reed. If you've not heard about Ronald Reed, read about Ronald Reed, right? So we're going to be ending very soon. Those who approach investing with patience, those who approach investing with knowledge, those who approach it with discipline, right? They are the ones who experience a different outcome in the stock market. And you can be that person, right? You can be that person. Okay, so successful investing is usually very simple, but it's not easy. It's not easy because of our lack of discipline, our lack of emotions control, right? Because it successful investing requires patience, it requires emotions control, it requires long-term thinking, it requires continuous learning. You need to keep learning. You need to keep learning. If you want to keep winning in investing, learning must not be a one-time event for you, right? You must continue learning. So, but all in all, the stock market rewards discipline far more than intelligence. That's the truth. Those who develop the right habits often discover that the market can become one of the most powerful tools for building long-term wealth. And Ronald Reed is the best person to read to understand that. All right, that's where we'll come to the end of today's live session here on YouTube. I'll be happy to take questions if you have them. Just throw questions, let's take care of them, and then I'll be happy to move on. Remember, we're going to still be back again next week, and then we'll still be talking about the stock. Throughout this month, we'll be talking about the stock markets all through this month. Up until first few weeks of next month, we'll still be talking about the stock market. Right? We want to demystify the stock market. If you have any questions, please throw them in. I will be happy to answer. Right, we are waiting for questions. All right, okay. Well, if you have any questions, even after this video, I'll be happy to respond to them. Put them in the comments, and I'll be happy to give you a response later. For those in the Money Click program, of course, you know that you can always come to the community, ask a question, and you get a response from me. In fact, I'm looking forward to chapter 5, chapter 6, chapter 7, and chapter 8 of the books we've used today. Thank you very much, everyone, for being a part of today's live session. Remember, we're going to be coming back here again on Wednesday for the Wednesday live session, and on Thursday also for the Thursday live sessions, all by 12 noon West African time. Thank you so much, everyone. Thank you, my cohort leader, Mrs. Emily Sarah. Thank you so much, everybody. Mrs. Adessa G. Thank you so much, everyone, for being here. Thank you for being a part of today's program, today's session. And we hope to see you next week again. Have a lovely day ahead, and bye-bye.